Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala Sayyidina wa Nabiyyina Muhammad wa ala ali wa sahbi ajma'in. Distinguished guests, ladies and gentlemen, Assalamu alaikum and good morning and very warm welcome to our webinar. My name is Mustafa Adil. I am the head of Islamic Finance for Data and Analytics at the London Stock Exchange Group, and it gives me great pleasure to welcome you to this webinar where we will be focusing on the growth and development of the Sukuk market. The Sukuk market is one of the fastest growing and most innovative segments of the Islamic finance industry. In fact, it is the second largest segment of the Islamic finance industry, and we've seen it thrive exceptionally well under uncertain circumstances during this last 2 years. Today, we will go through some of the key findings of the report that London Stock Exchange Group is launching, supported by our partners, Crescent Finance, and we will be talking about some of the key insights, analysis, and outcomes that have come out of the report. We are also very privileged to have with us distinguished speakers, including Ms. Nida Raza, who is the Senior Director and Head of Capital Markets at JLL MENA, and Talal Yassin, who is the Managing Director at Crescent Wealth, and we will be getting their insights and expertise on what's happening in the Sukuk space. Before we begin, I just want to go over a couple of housekeeping rules. And basically, this is going to be an interactive session. You can ask questions. There's a Q&A box that you can find at the bottom of your screen. And at the end of the day, I'm going to basically go through your questions, direct them to the speakers, and give a response. In addition to that, if you need any technical assistance, you can access that also through the control panel below. We will be sharing a recording of the webinar to all registered delegates at the end. So if you miss any part of this webinar, you can always go back and rewatch that. So with that, without further ado, let's begin. And I would like to start by focusing on the key findings of our Sukuk perceptions and forecast study for 2022, which has been titled Thriving Amidst Uncertainty. And the unique aspect of this report is that not only does Refinitiv capture the growth of the Islamic finance industry, in addition to that, we conduct a leading global survey to lead arrangers, investors, asset managers focused on their Sukuk strategy and get the insights directly from the market makers themselves. And in addition to that, we also do a forecasting where we project the growth of Sukuk, and we also identify and distinguish the supply and demand gap, where you can identify, what has been the demand for Sukuk and how much of that is being met through current supply. So all of these things will be covered during the course of this webinar, and to assist us, we will be utilizing the Sukuk Now app that is found on the Refinitiv workspace and Icon platforms to go through some of the key analytics and insights that can be found in the report. And to start with, I want to focus on the growth. And you can see on the right-hand side of your screen, the growth in Sukuk has been exceptional over the last few years. We had record issuances last year of $174 billion. But this year is expected to exceed that. In fact, by the first 3 quarters of this year, we've already hit 147 billion. And we are projected to hit 180 billion by the end of the year. In fact, during our survey, 35% of participants identified that they expect Sukuk issuances to be in excess of $180 billion this year. And there was a lot of discussion around whether the market conditions would have an impact on Sukuk issuances, but in fact, 89% of our survey respondents mentioned that the market conditions did not affect their Sukuk allocation, and in fact, they're expecting to either maintain the same levels or actually increase allocation for Sukuk within their portfolios this year, which is very heartening to hear. As we proceed, we can see that the split between sovereign and corporate Sukuk continues to persist. And you can see that in the left-hand corner of your screen, which shows issuances over the last few years split between sovereign, quasi-sovereign, and corporate. In fact, 62% of total issuances were from sovereign issuers, and an additional 15% came from quasi-sovereign. So in total, sovereign or quasi-sovereign issuances made up 77% of total issuances for Sukuk. This continues to be a challenge for the industry. And, whereas you have exceptional markets like Malaysia, where corporate issuances are growing, many of the other markets continue to be driven primarily by sovereign issuances. And, when we ask our issuers and arrangers why that is the case, right, they've highlighted a number of issues that are driving that, right? And one of those is the high cost of issuing Sukuk. About 28% of our participants mentioned that was a major hurdle for corporates to issue Sukuk. Another issue is that corporate requirements are for smaller sizes, where it's not practical to go out and issue an entire Sukuk program around that, and it's easier to avail financing facilities from banks and other institutions. And then lastly, 25% mentioned that there was a lack of underlying assets. So this issue around structuring Sukuk and having underlying assets continues to be a challenge. And while we have seen Sharia boards be flexible when it comes to sovereign assets that are strategic, when it comes to corporate assets, there is still more strictness, and corporates continue to struggle to be able to find the underlying assets to be able to issue Sukuk. And that was showcased in the outcomes of our survey, where 25%, a quarter of all issuers and arrangers, highlighted the fact that lack of underlying assets continues to be a persistent challenge for corporate issuances. When we look at the breakdown by country, I mean, again, we see, the traditional players, Malaysia, Saudi Arabia, Indonesia, Turkey, and Kuwait, driving the issuance of the market. In fact, approximately 90% of total issuances in the last year have come from these 5 countries, and they continue to develop and drive their programs. And particularly, it's heartening to see the likes of Saudi Arabia and Indonesia significantly ramp up their Sukuk issuances programs over the last few years to become leading issuers in the Sukuk space. And we expect that to continue over the medium term. Now, one of the key questions that we had asked our issuers was, how do we make the Sukuk market more appealing for mainstream issuers? And one of the key outcomes that came back was that, 69% of respondents felt that we do not have enough liquidity in the secondary markets. And liquidity in secondary markets, depth in the market, is very, very important for the Sukuk market to continue to grow and to thrive. Another reason that was highlighted, which is interesting, is that when we delve further into the lack of liquidity, 58% of investors mentioned to us that they expect, when they purchase Sukuk, to hold it to maturity, right? So there is, more than 50% of, investors are holding these instruments to maturity. And what was quite interesting was 17% mentioned to us that Sharia restrictions on trading becomes a hurdle for them when it comes to buying and selling of Sukuk, particularly on the selling part. So that is another, issue that has continued to persist. And we hope that, as the Sukuk market develops and innovation comes through, the scholars in that would address some of these Sharia restrictions and make the Sukuk market more tradable. Looking ahead, we see the Sukuk market grow significantly in the next coming years, and we expect it to reach $290 billion in the next 5 years, growing at an average CAGR of 10% year on year. And that's based on historical growth and projected and the demand that is being driven. Now, this continued growth is projected to decrease the demand. So the current demand supply gap sits at about $178 billion, and this is projected to reduce to about 120 billion by 2026. Now, Refinitiv has a very, very complicated model for calculating the supply-demand gap, where we look at both the liquidity that exists in Islamic institutions and the stated allocation of that liquidity or investments towards the Sukuk instrument. And in addition, we look at, during issuances, the split between conventional and Islamic issuances to calculate a demand driver. And then separately, we have a separate model that looks at the oversubscription rates for Sukuks over the last 12 to 18 months, and we have a discounted modeling for that, where we look at what is the actual demand that is being driven, and utilizing both models we come to what we estimate to be overall demand, and we see how much of the supply is meeting that demand. So in the report you'll find the details of that model and the underlying assumptions around it, so please do have a look at that, because it's quite interesting to see where the demand is being driven from. But when we look at the issuance of Sukuk, and we ran this survey and we asked our participants, the survey respondents, what is the primary driver for them to continue issuing Sukuk, we found that 58% identified diversification in their sources of funding as a primary reason, right? Now, we have all seen in the last few years, the low rate environment has driven issuances. COVID requirements have driven corporates to meet their funding gaps and to address some of their surplus spending needs through the issuance of Sukuk instruments, and that has had an impact there. But still, the majority of issuers are not issuing simply because it is a low rate environment today. They are issuing because there is diversity. They want to diversify their source of funding, and Sukuk is seen as an instrument that gives them access to a separate pool of capital that they can utilize for this. And although we've seen many countries tap into the Sukuk markets for their short-term or medium-term funding needs, when we see programs like what's happening with Saudi Arabia, like what's happening with Indonesia, continue to grow over the last few years, it's not something that is going to it is something that is strategic beyond simply what is emerging from the outcomes of the COVID pandemic. And that is one of the key drivers as to, that is driving the model to ensure that, growth in the Sukuk market continues for the foreseeable future. Now, another key driver of this growth is the emergence of new trends. So we see the emergence of retail Sukuks. We see the emergence of digital Sukuk. Malaysia should be first digital Sukuk this year. But the most prominent trend that we see is the emergence of sustainability or ESG Sukuks. And that is something that is significantly impacting and driving growth in the Sukuk market. In fact, over the last few years since 2017, we have seen the ESG Sukuks grow at an average CAGR of about 130% year on year. And while they still total only about $15 billion, which is relatively small compared to the overall Sukuk market, it is one of the fastest growing subsegments and trends within the Sukuk space. In fact, just this year alone, we've had about, we're on track to exceed over $5 billion in issuances this year. When we look at the breakup, there's essentially, a few countries that are driving this. So Saudi Arabia, Indonesia, Malaysia, United Arab Emirates, Bangladesh, and Turkey are all driving the development and issuance of these Sukuks. And when we contacted our survey respondents, about 74% said that ESG Sukuk is the most significant trend in the Sukuk market. And this includes green Sukuk, this includes sustainability Sukuks, and this includes now Waqf-linked Sukuks that are emerging in many markets as well. And they see Sukuk, ESG Sukuk and sustainability Sukuk as being a key driver for the growth of the Islamic finance industry and being a key instrument that can converge between the Islamic finance space and the sustainability space and bring it together. And the largest issuance that we had in the last year was the the Islamic Development Bank sustainability Sukuk issuance, a $2.5 billion issuance that was done towards the end of Q1 this year. It is the largest sustainability Sukuk that has been issued to date. And as many of you will be aware, the entire strategy of Islamic Development Bank has been aligned with meeting the sustainable development goals, has been aligned around sustainability in all their activities. And it's very heartening to see that Sukuk is a key instrument that they're leading with in terms of, trying to achieve that objective. Ladies and gentlemen, that was just some of the findings of our report. I highly encourage you to please download the report. We will be sharing a link with all delegates to download the report at the end of this, but you can find the report today on our Refinitiv terminals, including Workspace and Icon. You can find it under the Islamic Finance section in Refinitiv.com platform, in the Zawiya.com platform. So whichever platform you are most comfortable with, please go in and find the report and please go through it in details and share your feedback with us. We look forward to getting your inputs on this, and we are very excited to continue to be a part of the development of the Sukuk journey. With that, I would like to now bring in our expert speakers. I think I've spoken a lot and I've shared a lot of insights, but I really want to hear from them and what they say. And the first speaker that I'd like to introduce is Ms. Nida Raza, who is Senior Director and Head of Capital Markets at JLL MENA and is known throughout the region as an expert on the Sukuk space. Nida, thank you so much for being here with us today.
Thank you, Mr.
Nida, I think you're on mute, sorry.
Can you hear me?
Yes, we can.
Okay, wonderful. Thank you very much.
So Nida, I went through a number of insights, and I'm sure, in your role, you're more than familiar with that. But I think I really want to start by looking at, the last 18 months or so under COVID have been a very, very interesting time period. In fact, that titles, our report as well, Thriving Amidst Uncertainty. How have you seen the Sukuk market develop in the last 18 months or so? How significant has it been for many of the governments and corporates that utilize Sukuk to meet their funding needs? And where do you expect it to go from here now that we see, the vaccinations increasing and life slowly returning to normal?
Thank you for the question. I think it's a great one to look at. It was a very, very, very important tool for regions that use Sukuk, specifically governments to use Sukuk, because the liquidity was required to then take that liquidity and channel it back to Islamic banks and help prop up the various different initiatives that were being done, including government initiatives, which was vaccine rollout. It was very expensive to secure and procure them, and having the ability to quickly tap the market and have that funding available was one, very important. But two, it was also being used, generally Sukuk was being used to help channel the liquidity back into the banks, to provide liquidity to them, to allow for payment holidays, etc., to their end clients. And all of that was absolutely paramount during the COVID period when everything was in standstill. Nobody knew where the end was. And then obviously the low interest rate environment helped boost the affordability of such Sukuk. Equally, the subscription of these Sukuks were going through the roof, as you mentioned very clearly in your discussion. There was a lot of money sitting on the side. People were too scared to put it into long-term investments. Sukuk was a good alternative. Some other corporate bonds were, I'm sure, as well. But for Islamic investors and ethical investors, this was a very good place to park your liquidity, especially the big, large transactions like Saudi Arabia, UAE, etc., which allowed for investors to start earning some returns, albeit short-term, although I know they have it also for a long-term basis, some of these Sukuk.
Do you feel that governments that previously only allocated a very small portion of their issuances to Sukuk will now perhaps increase given the demand that they've seen in the Sukuk space that they entered in the last 18 months or so?
Honestly, I've been the biggest proponent of it. I think every government should be issuing Sukuk because you're going to a market which is far larger than just your conventional market. I mean, you and I both know, I think we've been going on about it for a while. Sukuks are no different in general, except documentation in terms of behavior and risk profile, than a conventional. It brings with it an additional layer of governance, which, to be honest, should be a good thing and should be looked at positively. So I think every government, conventional or otherwise, should look at issuing Sukuk in their future. Absolutely.
No, thanks for that. And then one of the interesting things that came out of the report was this divide between sovereign and corporate issuances. Now, you've been advising corporate issuers for many, many years now. How have you seen that change? How has this conversation changed when you speak to corporate issuers and when you advise them to consider a Sukuk issuance versus a corporate issuance or a direct financing facility from a financial institution?
Look, before probably the GFC and maybe a few years afterwards, there was a lot of progress around transparency for issuing Sukuk, ability to issue Sukuk quickly. The hurdles that were created from trying to understand from a Sharia perspective and a Sharia board perspective, those that are conventional investors, right? They have to go through a Sharia board to get Sharia approval. There was inertia in that. There was inertia in that because they felt, well, for 3, 4, 5 extra basis points, I have to go through so many hoops. I have to pay my lawyers a little bit more. Okay, I'll watch the market and we'll see. But I think since then, and probably around now, you're starting to see they're coming to you themselves and saying, okay, what about Sukuk? So that, in my mind, is a shift change to what I always advise from a capital markets perspective, which is issue a Sukuk. Or if you're going to issue at all, and you have to issue conventional, have a Sharia tranche. But now we're seeing a lot more following and a lot more understanding and transparency around it. But I think the biggest challenges still remain, which is some Sharia boards, depending on who the bank is that's representing you, can be quite conservative in their view, and getting approval for innovative type of structures can be difficult. So as you mentioned in your report or surveys, the survey respondents mentioned, finding assets to be able to have a tradable quote-unquote Sukuk is difficult for some of these corporates because it triggers other springing liens on their conventional debt and their bilateral facilities, etc. So getting them through that hurdle is a bit difficult. And then in some cases, lastly, in those jurisdictions where there's tax implications, when you start moving assets around into SPVs or out, there are tax implications. But then if you use the leasing model, which is the usufruct model, if it's a long-term lease, also triggers in some jurisdictions now tax implications, right? So those things, once we can, if there's enough demand from, I believe, corporates in those countries to approach the government to talk about, well, this is being done from a financial perspective, there should be a waiver for those tax insurances, which at present there is not.
Right. Is that what we see happening in Malaysia? I mean, we know that Malaysia, the government is very proactive in supporting corporates that issue Sukuk. Is that the main differentiator between Malaysia and other markets?
There's two differentiators. Absolutely, the first one that you mentioned, they are at the forefront and they take the bull by the horn. They set the standard and they want to probably be the biggest and the deepest market. The second is they have a huge, vibrant local capital markets. And, I urge all governments to have their own currency, local capital markets, and not rely on the hard currency markets. And you need to do that in two folds. One is be the leader in the issuances, be the leader in all across the whole spectrum, year 5 all the way to year 40 types of issuances from a government perspective, so we set a benchmark. But also provide the environment for corporates to issue, provide incentives for them to be able to issue in hard currency, but also in local currency. And that also benefits Islamic banks in those countries because they will have assets to invest in local currency as well as hard currency.
No, that makes a lot of sense. And as you mentioned, Malaysia has taken the bull by the horns and really set an example for other jurisdictions. In the report, Nida, we mentioned a number of emerging trends, with ESG obviously being the most prominent. What is your view on that? I mean, it's fast growing, but it's still relatively very, very small segment, only about $15 billion in outstanding ESG issuances to date. So what's your view and how big do you expect this to grow? Or
I think it will grow in a big way. There has been noise around ESG and Sharia principles for a long time, probably 5, 7, 10 years. And there's been a lot of papers that have been written between, the differences between Sharia and conventional and ESG principles, and there's a lot of overlaps. Look, the positives are the two are complementary in general. They have the same principles overall. The differences are, or the challenges I see is monitoring, right? When you say you're doing a green sukuk, it's really wonderful. But then there's a monitoring that goes with it. Every year you have to provide a report to say, okay, where did I use my funds? Where are those being used? If I adhere to UN PRI goals or UN Sustainable Development Goals, there has to be a monitoring and evaluation being done. So that costs something. There is structuring that's required. So there's a legal element which has to be considered. It's a little bit more complex than doing just a simple sukuk, because it needs to be, it needs to have some exclusions, and it also needs to have some inclusions. So, and that's where that plays a big role. Now, typically those countries that have issued Islamic or issued sukuk, but now have also issued ESG sukuk, many of them are emerging countries, as you very well know. A lot of them are using, the governments are using sukuk as a means, or even bond, or however they issue capital, to invest back into their country from a PPP perspective, infrastructure perspective, etc. Now, if these sukuks are going to be issued in an ESG manner, or quote-unquote green manner, then, for example, they can't fund coal-fired power plants if they needed to, or heavy fuel oil emergency power plants that, for example, Bangladesh needs at the moment. So those kinds of things they cannot, but they can equally issue sukuk and invest in or help fund solar power parks, hydrogen plants, wind power, zero carbon, other infrastructure assets. That's from the government perspective. Now, you mentioned Islamic Development Bank having issued 2.5 billion in ESG sukuk. Yeah, like you said, the basic principles of Islamic Development Bank Group and its private sector arm is simply to help accelerate private sector capital, public sector capital for the good of the environment and social governance. So their vision and their mission matches the issuance of the sukuk, and every one of their investments should qualify under that ESG principle. They also have a huge monitoring and evaluation department, which doesn't just structure or figure out exactly how to attach the UN Sustainable Development Goals against those issuances, but happens to monitor them on an annual basis and provide a report. Now, they have an army of people to do that. And there are, by the way, with this whole fintech environment, new tools that are available electronically, and you can subscribe to as a corporate to be able to monitor on your behalf and produce a report on your behalf on an ESG sukuk that you would do. I think it's a very important trend. I think impact investing, ESG investing is definitely here to stay, and it's being provided in every industry and every type of capital. And you can see that money is gravitating towards it. So you're seeing more investments in ESG compliant investments, ESG compliant funds, ESG compliant equities, etc. For example, we talked about Malaysia just a minute ago. I don't know if you saw recently, but the IMB in Malaysia has issued the first ever ESG Sukuk fund. So they believe that there is a big market in the ESG Sukuk market, so they've set up a fund that's targeting nothing but ESG Sukuk. So I think it's here to stay. I think it's going to go big, and I think people should look at it and start potentially issuing ESG compliant Sukuks.
No, that's very interesting insight. Now then, particularly, what you mentioned regarding IDB having the manpower and the muscle to take care of a lot of the monitoring and other costs, right? But when do you feel we would get to a point where structuring would be at a level and technology would be at a level where your common Sukuk issuer would be able to issue an ESG Sukuk without that added burden of structuring and monitoring and so on? When do you think we'll get to that tipping point where it's almost as straightforward to issue an ESG sukuk as it is to issue a typical traditional sukuk?
I think it'll be a faster journey than the Sukuk was from a conventional issuance perspective, so probably 3 to 5 years. But there are so many different variations that you can issue, so I suppose that flexibility will always remain. I think the important thing is the monitoring, and that costs money. With the advent of fintech, I believe those costs have come down significantly. My view is, and I think that this is what we have to educate, I guess, the corporates at, I think the governments understand to some extent, is that when you issue an ESG sukuk, you will get better pricing because you are attracting a different sector of the market and you're attracting a wider range of investors. Investors that wouldn't have invested in a sukuk may invest in an ESG sukuk because they have that ESG element in it. But what's important is to have the right monitoring. Now, if you can save money annually, or if your cost of borrowing is reduced, and you take that money and you say, okay, I'm going to park a portion of that to help me provide the monitoring that I need, I think they'll find that it's cheaper overall. But I think it will take 3 to 5 years, in my view, to become as easy and off the shelf as today a traditional sukuk issuances.
Sounds interesting, and we're looking forward to that. My final question, and we are pressed for time, so quick response. In our report, we had projected the sukuk market to grow at about 10% year on year for the next 5 years, and that was primarily driven by what we're seeing in terms of demand, but also from a historical perspective, seeing how the sukuk market has grown. Do you feel that that is a fair assumption? Do you feel that the sukuk market might grow faster than that, or are you a bit more pessimistic and feel that it won't potentially achieve the same growth rates as it historically has?
No, I think I'm very, very positive, big proponent, and I think I am very much surprised every year at the rate and the pace of issuance, and I hope long may it continue. So I am totally backing your predictions, and I hope we can beat them.
Sounds great. Thank you so much, Nida, for your time, and please do stay with us where, as we will go into a Q&A session towards the end of this, and I would like to remind all the audience members to please use the, Q&A tool that is available on your toolbar at the bottom of your screen to submit your questions for our speakers. Thank you, Nida, for that. And we will now move to our second expert speaker, which is Mr. Talal Yassin, who is the Managing Director at Crescent Wealth, and we will talk about the emergence of Islamic finance in some of the frontier markets outside the traditional homes, and in particular how the innovation of Sukuk has helped or can help institutions scale in those markets. Talal, thank you so much for being with us today.
Thank you very much. Assalamu alaikum, everyone.
Alaikum assalam. Talal, I want to jump right into it, and really, I want to talk about the emergence of Islamic finance in some of the non-traditional markets outside the GCC, outside Southeast Asia, and in particular, the emergence of Islamic finance in non-Muslim majority countries. And obviously, Crescent Wealth has had a tremendous growth story in Australia. And before we get into the details of that, just broadly, how have you seen the landscape change, compared to, let's say, 10 years ago, where you were trying to, probably maybe knock at the door? How have you seen the landscape of the Islamic finance story change in some of these markets?
Well, thank you very much, Mustafa. I think I just note one, before I start and answer that question very directly, it's very interesting to call Australia a frontier country, in the sense that we're very, westernized, old, boring country, and we're now the frontier. It's ironic. I love that comment. I'm going to use it. We're a frontier country. It gives us a bit of sassiness, and sorry about the Australian accent to all those global listeners out there. But I guess, in direct answer to your question, I guess I make 3 points. First of all, when we started 10 years ago, Islamic finance was nascent quite globally. We were pioneers in Australia, but we thought we were not pioneers globally. And I don't mean that by way of a boast, but by way of we're looking for other people to copy, because what we wanted to do was learn from others in different markets. And I guess Malaysia was relatively well developed. Indonesia wasn't. The Gulf was barely talking about it. Saudi Arabia, which I visited several times, numerous times actually. It was a very interesting and exotic discussion, but it never resulted in a mainstream. But over the last 10 years, Malaysia, mashallah, has developed in leaps and bounds. It's become quite mainstream, as your attendees today would be acutely aware, and the Gulf is following, and there are new markets opening up. But I'm no expert on institutional Islamic finance and Islamic finance generally. I think that is well known. But from where I sit, there's a world of opportunity now with what's happening in the Commonwealth countries, which is what's happening in the US with the, guidance residential and guidance investments, which is what's happening in Canada with all the Islamic finance activity that's occurring in London, where you are at the moment. That is very, very different to the landscape we faced when myself and others as a Westerner, Islamic background, Arabic background, but the programming was completely Westerner, common law lawyer, MBA, the classic, to try and, with all best intentions to find a solution and an authentic and appropriate, coherent one that solves for people's beliefs. And the pension system, which we call superannuation in Australia, was a way to commence. Fast forward 10 years later, after many trials and tribulations, alhamdulillah, Crescent Wealth and the Crescent Group is on a trajectory to scale with very many significant Islamic finance executives, including Dr. Saeed Farouk and others who are well known, joining us coming home, so to speak. And we are on a trajectory to scale. We're about 40 something million Aussie, which is, you can do the US calculations. I think it's about 200 and something US. So it's quite small, but growing significantly, inshallah, and on the precipice of growing quite significantly, which is not quite, and we're going to get to Sukuks and issuance and, corporate and government issuance, but it's not quite on the level of what we're seeing globally and what I'm describing globally, but it is getting there, inshallah.
So, just to press on that, Crescent Wealth obviously is, regularly recognized as one of the top performing funds in Australia, right? So, how have you been able to articulate the value proposition of Islamic finance or Sharia compliant investing to your audience in Australia, and what is the impact that you're seeing of that on the markets, on investments, and so on?
Well, I think I'd love to answer that question if I had 3 hours, because I have a very deep and nuanced answer to it. But as a former lawyer, I can't say good morning in less than an hour. But let me be very brief. The first point I'd like to make is that some years, like this year, this financial year and last financial year, alhamdulillah, we performed exceptionally well. In years before then, it's been a choppy experience because what we're actually doing is pioneering global products, translating to Australian dollars, and then building on the pension system and working throughout the pension system in Australia. For those who don't know, the Australian pension system is worth and we call it superannuation, $3 trillion. We're the fourth biggest market after the US. I think I think I've got them here, after probably Netherlands, Luxembourg, and then there's us. And you would argue that we're actually number two because of Luxembourg and Norway or Netherlands, which I can't remember which one of them, is basically an intermediary of international finance. When I say 3 trillion, that's Australian money predominantly, and there's not a GDP figure. This is our pension scheme because it's mandatory in Australia. And so the performance of funds is quite significant, quite developed, and quite mature in the conventional sense. And alhamdulillah, Australia is very highly regulated, one of the only 9 AAA rated countries in the world, and remains so and has been so for decades. And it's interesting because when we set up in Australia, we are competing with the best. And what I mean by that is Australia is AAA rated on S&P, Moody's, and Fitch, and it goes along with Denmark, Germany, Luxembourg, Netherlands, Norway, Singapore, Sweden, and Switzerland. So generally speaking, the global audience, whether conventional or Islamic, generally does not put us in that category. Talking about the North European best practice countries in the world, safest countries in the world, and most regulated, unfortunately, or fortunately, I don't know which one. And so we at Crescent Wealth, alhamdulillah, when we started, to go back to the other part of your question, we've developed a lot of skills and a lot of, by trial and error and a lot of cost, being able to get pension returns that meet the market, but with all the exemptions. And we're talking about investment here, all the exemptions, because whilst globally, alhamdulillah, there's a lot of investment opportunities, in Australia, of the ASX, Australian Stock Exchange, top 300, at least half we cannot invest in. So it limits our range. So we've got to work doubly hard to make sure that we're not only Sharia compliant, not only qualify and comply with the global OFI standards, we get audited by those Sharia, Dubai Islamic Bank, and we have to comply with all the Australian standards, which are, compliance on steroids. London, Dubai, and US combined are not as regulated as us. We're more like Switzerland and Sweden, and that's not and I'm not sure that's a good thing. But alhamdulillah, it's we've created a significant community, institution, and enterprise to allow people to retire in dignity and honor, but at the same time to create a whole new pioneering space in Islamic investment in Australia. And alhamdulillah, we've created an industry, because others are coming on now. And for the 1 million, approximately 1 million Muslims in Australia. And the last point I'd note is that, but for Germany, there is not a significant concentration and practice of the Muslims in terms of the Western world and development of their faith and their belief system and their institutionalization and mainstreaming, and to contribute to social fabric like there is elsewhere. We could be compared to Germany. That's about it, I think.
No, that's fascinating, Talal, and I think that, given the environment that you operate in, it's all the more a testament to yourself and your team as to what you've built with the Crescent Wealth. And, I can talk about, this all day as well with you, probably match you for the 3 hours on this experience. But,
Yes.
One of the very interesting things that I want to talk about now is Sukuk, right? And obviously we've seen a lot of innovation in Sukuk. We talked about that today. And Sukuk is now an area that institutions like Crescent Wealth are also looking at, or Crescent Finance is looking at, right, as an instrument to help them scale. Can you talk about that and what it is that you will be utilizing Sukuk for?
Certainly. Let me just make one comment about myself and starting. I think I need to acknowledge my unbelievable team. Alhamdulillah, I'm the front man. I'm good at talking. The team are the ones that built this great institution, and I've had a wonderful, committed set of professionals who are Muslim and non-Muslim who believe in the legacy we're trying to create. And because it would be remiss of me not to mention that, as some great savior building, I don't know the first thing about Islamic finance until I learn it. Like now, I've just learned it. No, I'm only joking. So let me transform the discussion slightly, so I don't want to confuse our audience, from Crescent Wealth to Crescent Finance. So Crescent Wealth is an Islamic pension fund that is privately owned, which is the only one in the world. So there might be Islamic pension funds globally, but they're usually government owned. We are a privately owned Islamic pension fund. Crescent Finance is the next stage of our development, whereby we are looking to create a fully Sharia compliant non-bank lending institution. And in fact, following in the great footsteps of that wonderful organization, Guidance Residential in the US, and we have faced similar issues. So the first issue is that, which is a simple one, how do you structure lending or investment or co-investment as opposed to Islamic lending? And we've come up with the number of traditional structures. But the bigger issue is, how do you fund that in a Sharia compliant manner in the Western world? And so a lot of institutions or groups who are with the best of hearts and the greatest of intentions have sought to, find debt warehouses, repackage them, and then sell them to the Muslim community, have a fatwa as a necessity. And we don't decry their attempts. They've been trying really, really hard to build a non-bank lending or Islamic lending and investment for the Muslim community. However, we're trying to crack that nut by creating and this is where we come to Sukuk, by creating our own ability to raise equity. And that is by setting up a mortgage-backed residential fund with various classes, and also, potentially investing in Sukuk. Now, as Crescent Wealth, by issuing a Sukuk or a Sukuk of some sort, as Crescent Wealth, we invest in Sukuk in Malaysia. We have the same issue with availability and quality. We have the same issues with the ability to invest and the secondary market. But now we're on the other side, where we are thinking that the Australian market has a deep, deep need for Sharia-compliant investment, and Sukuk is exceptionally promising and investment in that regard. And so we are looking actively at the residential market strategy in terms of connecting the dots. A massive Islamic community, so we have 11,000 members who are in need of Islamically compliant lending, where the source of funds is Sharia compliant, and so is the structure as opposed to just the structure, and where factually 15.6% of Australian Muslims fully own their homes, and 29% of the Australians generally own their homes. So half, in other words, the Muslim community, because of the non-availability of truly Islamic compliant borrowing, less than half own their own home. So they rent. And so we're looking at this addressable market of at least $70 billion and a serviceable market of $20 billion, really conservatively, just on the face of it, and saying, how can we raise this money against and lend it in a Sharia-compliant manner, or co-invest it with the Australian Muslim community? So in short, and in plain English, there's a massive and growing market. There is an intermediary and a institution, Crescent Finance, headed up by Dr. Said Farouk as the director and architect. So he knows his stuff and has plenty of experience with the board consisting of who's who of Australia. And then we have now the investment and the structure. But what we're missing is connecting those dots between the global market of Sukuk, Sharia-compliant ability to raise money, and to then, be a mediator between that capital and the Australian Muslim community that is dying out for a authentic Islamic investment product.
No, that sounds very, very interesting, and may Allah reward your and your team's efforts, because you'll be addressing a very serious problem. We've all seen the impact that institutions like Guidance have had in North America, for the Muslim community there, and with these things, the devil is always in the details, as I'm sure you and your team are aware. What kind of timelines do you have for something like this? Because, this would be a very interesting way to utilize Sukuk instruments to fund, mortgages or, home financing for the Muslim community, very much aligned with the principles of Sharia, in that you're addressing a need for the community, very much aligned to the structuring requirements where you have real assets, real tangible assets that are being rolled out. So, do you have any timelines in mind? When do you expect this to happen?
We do, and we've already started, inshallah, and we've started early next year. We'll have our first, let's call it alpha, in terms of test of, because Crescent Wealth will give the first, for example, 20 million to the investment fund and start building. And in Australia, the average home is about $1 million Aussie, which is about 750 American. So it's very expensive to live here. And so 20 million gets you maybe 23 loans maximum, Right. And then we'll be raising capital onshore in terms of the other pension funds, because it's a great investment for them by way of a return rate, and safety and security. The Australian property market is a market that's thriving Australia, that has not faltered for 30 years, and that has a less than 2% delinquency rate for the general community. For the Islamic community, it'd be even less than that. It'd be because they'll end up to 90% in Australia. We would co-invest up to maybe 70% maximum. So from a loan value ratio or investment value ratio, it would be very, I guess, conservative. And so we see us stepping in late next year into the market, and the year beyond that potentially issuing Sukuk or inviting our friends around the world to have a look at what we've built and to provide an entree into this very lucrative market and this very safe market.
That sounds excellent, and really looking forward to seeing this project roll off, the ground. And I'm mindful of time, and I know we're running short, and I want to get to audience Q&A as well. But what do you see as the biggest challenge in achieving this? What is keeping your team up at night? What is keeping you up at night as the biggest challenge? Because the dynamics of this, the economics of this makes a lot of sense, right? I mean, everything that you've mentioned seems that it should be a no-brainer to roll out. But what is being seen as the biggest challenge here?
The biggest challenge in Australia is the regulations and capital. Usually it's the other way around. Usually it's capital. Where do you get the money from? How do you get people to invest? How do you prove a track record? It's actually the regulatory environment in Australia is exceptionally onerous. It is on steroids in Australia. Because I've been to Dubai, I've done regulation there. I've done the London Stock Exchange regs. I've been to the US, and it's pretty laissez-faire compared to Australia. And so the cost, the time, the energy required to get your license, to actually set up, to actually comply with all the regulatory requirements is enormous. It's millions and millions and millions of dollars before you have $1 in the door. That's number one. So it's very different to other places. And number two, it's then what I call, they call it the barbecue test, and my people don't like me using this example, but I will. And that is when you, in the Australian context, one of the expressions, the idioms, is it doesn't pass the barbecue test. So imagine you're around a barbecue and someone tells you something, it doesn't sound right, just the sniff test, right? I call it the shish kebab test, and that is making sure that we're authentic to the letter of the Islamic law and its intention. And so we have a lot of people in Australia trying their very best to lend Islamically or to co-invest Islamically, but the source of capital is the most difficult part. And so for us, really, the business is capital management, creation, attraction and creation, in the sense that you've got to sort of start with 20 million, prove it up. You've then got to, because there's billions and billions and billions of dollars that we've heard that is growing. But the problem is you need to be of a certain credit quality. You need to have a certain experience, a serious, for you to be a player. And the Australian market is exceptionally deep in debt, in terms of debt regulation, banking regulation. Our banks are, the big four banks are top 10 in the world and have been ever since they were started, in terms of safety and beyond. And this is the market we're competing in. So attracting that capital, so we would be the only Sharia compliant institutional organization in the country, and that requires institutional commitment, that requires institutional amounts of money and a long time frame and sabr. So to give you an example, when we started Crescent Wealth, the budget was about 250,000 American to start it all up. 10 times that later is what it costs to set up in Australia in terms of time, effort, energy. and you have to be institution, right? And and that is the startup culture in financial services globally. But I don't mean fintechs where, if you get it right, you scale quite dramatically. We're still building trust businesses. And unlike Sukuk is basically, the sovereign or the corporate, whoever's issuing it. I know we have the problem of quantity, quality, and secondary market, but you've still got your risk appetite, and you're still looking at the counterparty risk of, well, which government is issuing it? Is it Dubai government? Is it Abu Dhabi? Is it Malaysia? What's their rating? And the same, if we ever issued a Sukuk, we need to be competitive, quality, risk mitigated, risk assured, and compete with the general market, even though we'll be the only Sharia compliant. And for that, we make no excuses or apologies. We will compete, inshallah, and we will build. And hopefully it will be a legacy for Australian Muslims and beyond into the future.
Inshallah. And we all wish you success in that, which will go a very long way to address a very real need for the local community, as
Thank you,
you
Mustafa.
highlighted.
You have a couple of billion to lend us?
If I did, it would be. So I'm mindful of the time. We only have a couple of minutes left. So I don't want to move beyond without asking a question. And there's a particular question that's been raised, which is quite interesting. And Nida, if you're there, I would like to direct this towards you. Basically, John is asking, are there checks or controls that can help with the monitoring of Sukuks to ensure that they remain compliant post issuance, right? And how can the industry build that into effect? And it continues to say that various institutions utilize it for either real estate construction or other activities, but at the end the quality of labor they use, the treatment, and various other things would not be deemed as Sharia compliant. So although the proceeds seem to be Sharia compliant on paper, the actual execution may not live up to what is expected. So is there a mechanism for ongoing monitoring of proceeds of funds to ensure that they remain aligned with the objectives of Sharia?
Great question, and thank you for that. Historically, there hasn't been, and that's a fact, because just the Sharia monitoring aspect is quite onerous. And it happens to be on just to make sure that whoever is issued complies with where the investment person paid in. But it does not go through to the level of what are your HR policies like? What are your ESG policies like? Etc. But I think with the advent of ESG Sukuk and the light that has been shown in general on ESG, whether you are doing issuing Sukuk or you're Islamic or not, the fact is these practices are coming to light. And those issuers that have questionable practices will get that pushback from investors naturally. But I think transparency is very important. I think policies and regulations in each country has to determine the best deterrent to questionable practices such as the ones that I mentioned in that one. But today, if you were to ask me that question, the answer unfortunately is not.
Yeah, no, and we see that, and the audience sees that, which is why they've asked that. But I think this is, as you mentioned, this could be a very, very positive side effect of the emergence of ESG, is that not only is there going to be ongoing monitoring of the ESG side, but there could be potentially ongoing monitoring on the Sharia side as well as we move forward. With that, I'm mindful of the time. We've actually overrun a little bit. I would like to take the opportunity to thank my fellow speakers, Nida and Talal. Thank you so much for being with us and for sharing your insights. And I would like to thank all the delegates that joined us today. And please note that you will get a recording of the session. So if you missed any part of it, please feel free to watch that again. You will also get a link from where you can download the report, our report, Thriving Amidst Adversity, the Sukuk Perceptions and Forecast report done in collaboration with our partners and supported by Crescent Finance. And please do download the report and go through it. And we look forward to welcome you again soon to future webinars. Thank you very much. And Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalam.